All right, I want to ask the question. Do you know who Marko Kolanovic is? Interesting guy that's been popping up in the news lately. JP Morgan's widely followed analyst, and so he's calling for a bounce today and going into next week. So it's always interesting to watch this to see if they're right. I'm not going to change what I do based on this. He called for this. He said it's time to buy the dip 6 days ago. So the market, that was 2 days before this big rally we had on Tuesday, turnaround Tuesday. And so last Friday the market held up, and then Monday it sold off, and then it rallied on Tuesday, and we're up from where we were last week. So it'll be interesting to see what happens. He's calling a bottom in this, a short-term bottom. But he also says this here. This is interesting. This is just interesting reading. You can Google his name and read more about him on these CNBC videos and see what he says. Top quant warns next crisis have flash crashes and social unrest not seen in 50 years. And so, yeah, I guess if there's when the next bear market comes around, I do anticipate these flash crashes as well. I don't know when that'll occur. I've anticipated this dip, this pullback, but it's not necessarily a bear market. So we'll see if there's some more severe selling. I'm looking at the new highs and new lows. I want to show you that, and then I want to show you tick count trend in Tradestation and NinjaTrader. Here is the chart of the ES at the top, the new 52-week new highs in orange. The blue is the 52-week new lows in blue, and at the bottom you see the spread difference. And so what's interesting to note is the 52-week highs. This is the most interesting thing to me. Have been capped out since the sell-off in January, February. They have not returned to this, even though the market, the indexes have returned to new highs. Look at the buying and the new 52-week new highs that occurred prior to the beginning of this year. And then since that's happened, you don't see the new highs at the same levels on the NYSE. There's not as many 52-week new highs surging each day, but you do see more activity in the new 52-week lows, and then we've had this big spread difference that's occurred. You see what happened in January, February was minor, and it's much greater now. It could reverse. This could be seen as a sign of an opportunity to buy, but much stronger selling. Fundamental change with interest rates. You see this downtrend in the new highs and an uptrend in the new lows. And so we'll see if that reverses or if that continues. It's hard for me to see this market reversing until we get, at least a little bit of a one day. We've had, I think, 20 days in a row where there's more new lows than new highs. And so we'll see if there's a reversal of this to look for an uptrend long term, but right now it feels like we're still in this pullback, so I disagree a little bit with Marko, what's his name? Marko Kolanovic. So we'll see what happens, and in the meantime I want to show you tick count trend 2, or tick count trend. So here is tick count trend. It has the potential to capture some big trades. It trades on 1 minute chart. It uses the NYSE tick. It's an old strategy that I have. It doesn't do as well during low volatility, and we came up with other strategies when volatility compressed. We decreased the time frame to 15 seconds, and we looked at some new algorithms, and we have tick pulse. When volatility returns to what it was before, the ranges, we look back at tick count trend and we see some good results. And so I want to show you the performance summary for this since about 5/15/2017, and I did change the profit target from 200 to 800. I want to catch the bigger moves. And you see the equity curve. This is with $25 round turn slippage and commission, and this is $72.89, almost $100 average trade profit. So you use a $300 stop loss, $800 profit target, and 41% profit. 41% of the trades are winners because you have a tight stop loss, $300 and $800 profit target. So you're going to get stopped out, but that's pretty good. That's pretty good for that ratio. Usually with the $300 stop loss and $800 profit target, it's hard to get even 40% winners, and it's usually not a very good strategy. But tick count trend works well. I'm going to show you the original inputs for this strategy. So we only changed the max daily entries from 10 to 6, from 6 to 10. So we'll change that to the original. We changed the profit target from 200 to 800, kept the stop loss the same, and all the other parameters were the same. And so we're going to take a look at the results with the original parameters, just so we'll know how we're doing without changing anything. So here are the results. $14 average trade profit. That's taking out $25 round turn slippage and commission. You are 67% profitable because now you have a $200 profit target and a $300 stop loss. 28.50 drawdown. Here's the equity curve. So recently it's done better as volatility has picked up in March. And so beginning of this year we had some volatility, and it's continued to make equity peaks into as far as October 17th, and then we had this drawdown, but it's cyclical. I like the cyclical nature of this drawdown, so will we get another run up if you do technical analysis on the equity curve? And so I don't care to trade with if I can trade with a bigger profit target, I can. You see the difference on a day like turnaround Tuesday. Had all these trades hitting their profit targets, but on the day, let's take a look at the results on the day. So Tuesday it was up 1,050, I guess. Let's see, what's today? Yeah, Tuesday was 10/16, 1,050 on 6 trades. Let's look at it with $800 profit target and no profit target. Here it is with an $800 profit target. You see 21.50, and you see a big day here on 10/10. So I want to catch the big winners, catch the runners, and you see the equity curve here. Now I'm going to change it to no profit target. So a little bit more volatile of an equity curve. You really boost the average trade profit when you do that because you really catch the big winners. You see Tuesday's trade, big rally. So either way, we're happy to catch a big trend up or down. It caught some of this move yesterday after the first trade lost, but it gave back from the lows, and so you're leaving that open, catching a big move into the close, and 38% winners. So it's another way to take advantage of any big up or down movements that we may get in this market if you want to trade for the big trade. You know, in January, February, we had some strategies that without the profit targets would have captured 100 points because they get out on the close. And so that's what we're looking to do, is we want to catch a big runner if it happens. I'm not saying that it will, up or down, but we want to catch it if it does happen, have the opportunity to catch a 100-point gain on the S&P in one day if it happens. Here it is in NinjaTrader 8. This uses a profit target and a max daily entry of 1. And so we changed the parameters slightly, but you see on a day like Tuesday it would have captured the move into the close. So it could have captured the move to the close if it would not have had a profit target. What is the performance summary? We go back further on this, and so we go back to 1/1/2006, 1,870 trades, $50 average trade profit, 94,912.50. Here is the equity curve. You see a big jump here with the volatility we had earlier this year, kind of sideways right now. We've had some increase in VIX, but we haven't had the same 100-point days that we did in January, February. You see a nice equity curve there, and so the equity curve can do really well at certain times. It can be cyclical. Let's look at the annual analysis long term, and we can take a look at this. And so in 2018, you see here 104 trades. What I immediately like to look at is the average trade profit. And so you see $100 average trade profit. 2017 was down, very low volatility. 2016, $86 average trade profit. 2008, $78 average trade profit. And so there's some years where if it's above 50, those are nice years. Above $50 average trade profit, those are some nice years. And then there's some years where it's below. You see the total net profit on some of these years. It was up 17,000 in 2008, 13 in 2009, 11 in 2011, 8 in 2012. And then 2013, 14, 15, not that great. 2016 came back. 2017, very paltry year in 2018. So it's a strategy to consider. Allows you to catch a big move. It has a tight stop loss of $300, and you can limit your max daily risk to that just $300. So if you want to um, trade a strategy like this, you can limit your loss each day to $300 and trade for the big winners, and maybe you catch a big move and look to have one of these years. If not, maybe you have one of those years and it was a down year, volatility collapses, or if you have a year like 2010, you know, it's not going to be a great year, but that's the risk, and so this strategy can give you the opportunity to do that.